This video is actually about, are they going to sell my loan? 7A guaranteed loan. So anyway, it is a federally guaranteed guarantee. So anyway, it can be sold because it is so secure. So anyway, this is actually about the secondary market for SBA guaranteed loans. And mainly we're just talking about SBA 7A guaranteed loans. So anyway, the information really in this was taken from the SBA's website, and parts may be verbatim. And this was taken really from those two things just to ensure accuracy. So anyway, the SBA established the secondary market for SBA guaranteed loans in 1984. And they did it to provide a mechanism to sell the guaranteed portion of the SBA 7A loan in order to provide liquidity to the lender. You know, this was established so that lenders would be able to, relend funds, return from the sale of the loan guarantee. SBA does have a list of banks that will pool many loans and sell them to investors. So you have to remember that you may not know this is happening if you're a borrower, because basically they just go ahead and sell it. The bank retains the servicing and they get paid 1% to do that, 1% of the value of the loan. So anyway, to give you a real short, we're going to go into more of the actual how they do it, but to give you kind of a short summary right now. And this is what we're going to talk about. If you stay to the end, we're basically going to get more into, really kind of how much they can make out of this, the banks themselves. But basically what they're doing is the bank is actually, they're just selling off the guaranteed portion of their SBA loan. It has a federal guarantee. And to be eligible for this, they basically go through, like I said, a list of banks that pool these loans together and then sell them to investors. So basically, to be eligible for it, they have to have a variable rate, and they really have to be, their term has to be a, kind of a common term. So I would say their term has to be either like 10 years, 15 years, 20 years would probably be the best, and then 25 years. So anyway, it has to be, if you get this, 7-year loan, I don't know, it might be harder to place and you might not get as much money for it. So what happens is the bank sells this off and then they get a premium. They get the money back that they sold it for, and then they get a premium on top of that, which can be very lucrative. It can be up to, it has in the past been up to like, 10 to 12%. So anyway, it can be very lucrative for banks to do that. Now they do keep usually their 25%. If this is a 75% guarantee, the bank will keep the 25% and actually service that as a regular loan. And then, like I said, they do the servicing on the guaranteed portion and they get paid 1% to do that. So you may not even know this loan is sold. Chances are you probably won't if you're a borrower. So anyway, the lender must use what is called Form 1086. It's a secondary participation guarantee agreement. SBA Form 1086 provides the terms and conditions that govern the sale and all subsequent servicing of the loan, which must be executed by the lender. And then it also must be executed by the lender, the registered holder investor, the fiscal and transfer agent, FTA, which would be those banks that pool it, and the SBA. So anyway, according to the SBA, there's 7 things a lender must certify in order for a 7A loan to be sold in the secondary market. Number 1, the lender has underwritten, closed, and serviced the loan in a prudent manner and in accordance with the SBA loan program requirements. Number 2, the lender must not share any premium it has received from the sale with a lender service provider, packager, or other loan referral source. And number 3, the loan must be dispersed. To be fully dispersed, the borrower must have access to all the loan proceeds and is able to use them in accordance with the loan authorization. Now, number 4, the loan is not a revolving loan or a line of credit facility. Not a revolving loan, not a line of credit facility. Number 5, The SBA guaranteed loan fee has to be paid by the lender. There is a fee the lender pays. It's usually up to 1% that they pay for every loan they do, and they pay that to SBA, usually quarterly. So anyway, number 6, kind of running out of fingers here. The lender or any of its officers, directors, and employees has no knowledge of a default or likelihood of a default by the borrower. None of the people at the bank can have any knowledge of a possible default by the borrower. Number 7, the lender has no authority to unilaterally repurchase the loan guarantee from the registered holder without SBA's written approval and consent. So anyway, there is a lot of kind of SBA jargon in there or whatever. So anyway, the following sale documents must be presented to the FTA. If you remember, the FTA is basically the lender who pools all these loans and then sells them to investors. So anyway, number 1, a fully executed SBA Form 1086. Number 2, a true certified copy of the borrower's note with any amendments and or modification. All notes, amendments, and modification presented for sale must have the SBA loan number listed on the first page of the document. Loan and sale information is recorded on the SBA 1086 by the lender and purchaser, and then these documents are presented to the FTA, basically the bank who pools the documents, or pools the loans and then sells them to investors. So anyway, and then the FTA, they basically examine and do the processing, of those documents. The FTA will identify any errors on the note or the SBA Form 1086 and notify either the lender or the broker dealer, that there's a problem here and you need to fix it. Secondary market sale settlement. Upon confirmation settlement date, the registered holder investor will wire all sales proceeds, including principal, interest, and premium, to the FTA. And that's if you remember, the FTA is the bank who pools all these loans and then sells them to investors. The FTA will wire the sale proceeds to the lender who sold the guarantee. The FTA will also issue a guaranteed interest certificate to the registered holder investor that bought it, evidencing ownership of the guaranteed portion of the loan. This guarantee is unconditional. All borrowers' payments received by the lender after the settlement date, which can happen, must be remitted to the FTA using the SBA Form 1502, according to the instructions given in SBA Form 1086. So anyway, the active 7A loan pool assemblers, those are those banks that pool all these loans and then sell them to investors. The active ones and contact information is maintained by SBA on SBA's website. So anyway, and that is, that's great. There actually is a list of about 10 of them, 10 or 12, and you can, I've heard of banks that go ahead and send each loan they do a 1086 for all of those assemblers, and then they pick the one that pays them the highest rate. So there is some competition between those. You can either look at several and pick out the highest rate, or you can go with one, and there are some benefits to that in that pool assembler, that active 7A loan pool assembler, that bank that pools them and then sells them. If you're going through him every time, I would think he'd give you some benefits. They usually give you some tips, and I think he'd try to give you his best rate also. So anyway, thank you for watching. Please put any future videos that you'd like to see in the comment section below. Please subscribe. Please hit the bell notification to get notification of future videos. If you learned anything, I hope you please hit the like button. And then really, thanks again, and I will see you in the next video.